In an unexpected move, the Federal Open Market Committee decided against tapering quantitative easing during its September meeting, meaning it will go ahead with the full $85 billion per month programme. Federal Reserve Chairman Ben Bernanke cited a lack of improvement in data from key sectors as the cause for the decision. Tim Condon, economist with ING Financial Markets, joins me on the line now. Tim, how big of an effect did this have on the markets?
No taper, if you will, was a great surprise, and markets for all financial assets rallied very hard on the news. Equities rallied, treasury bonds rallied, commodity prices went up, and the U.S. dollar depreciated in the foreign exchanges. So it was a big surprise, and financial markets took it very well.
Although it may seem like a good news initially, could this cause long-term difficulties?
The movement in financial asset prices it would be consistent with an interpretation that the Fed's announcement was a significant easing of monetary conditions in the U.S. I think that's probably a mistake, that the policy didn't involve any incremental easing by the Fed, but I do think it suggests that the Fed wants markets and all of us to take their forecasts about when it intends to start raising interest rates more seriously. Markets had begun to price in a hike in the Fed funds rate, which is the Fed's policy rate, in September or October of 2014, when the members of the Federal Reserve's Open Market Committee were forecasting. They control that rate, and they were only forecasting a move late in 2015, so a year later. I think that the Fed was trying to tell us that we should take their forecasts more seriously.
What were the other main events that shaped the financial week?
Next week is not a particularly heavy week in terms of economic releases or central bank meetings. I suspect that what may start to come into greater focus for financial markets in financial markets is the looming budget difficulties in the U.S., with brinksmanship being played by the political parties. The Republicans have said they want to pass a stopgap bill providing enough funds for the government to get through until the end of the year, but a condition of that would be that they would defund, so-called defund Obamacare, the president's health care legislation. That is a non-starter in the Senate, which is controlled by the Democrats. So there is shaping up a potentially ugly fiscal battle in the United States that I think could roil markets next week.
And finally, looking ahead, what should we be looking at that will shape the next financial week?
There was really not much. The focus the entire week was on this meeting. It's been the focus for some time. The Reserve Bank of India, for example, postponed its policy meeting some time ago to after the Fed meeting in order to be able to react to it. So people have been anticipating this for some time, and I think and had moved to the sidelines in terms of position taking in financial markets ahead of this week's Federal Reserve meeting, and so it really did dominate the calendar.
Tim, thank you for that, and thank you for joining us today. And that's all we have time for now, but do check back next week for more updates and more interviews from the Dúchascopy TV team. Bye for now. Have a great weekend.